All right, welcome back everyone. Today we're unpacking a massive retail paradox in an explainer that's going to fundamentally change how you view your weekend shopping trips. We're looking at a true titan of industry, but one that operates on a structural logic that seems totally backwards to traditional business.
Seriously, think about this for a second. Why does one of the absolute biggest retailers on the planet make shockingly little profit on the actual stuff it sells? I mean, how are they keeping prices so unbelievably low while getting millions of us to willingly hand over cash just for the privilege of walking through the front door? It totally goes against everything we assume about how to build a successful retail empire.
Okay, let's dive right into this. Over the course of this explainer, we're unpacking the precise strategy behind this billion-dollar success story step by step to understand the actual mechanics that make their model completely unique.
Section 1. Birth of the Warehouse Club.
So it all starts with a retail pioneer named Saul Price, who essentially invented the whole warehouse club playbook. And then, by 1983, Jim Sinegal and Jeffrey Brotman took that concept, refined it, and officially founded Costco. Their entire foundational philosophy was built around this totally radical idea at the time, membership-based shopping.
And this fundamental shift, it was huge. Instead of marking up every single item to squeeze out a profit like your traditional supermarket does, the warehouse club model totally flips the script. They require an entry fee, they focus almost entirely on bulk purchasing, and they operate in this really bare-bones environment. For the consumer, this was a massive structural change. People literally had to learn a totally new way to shop.
Section 2. The efficiency of less. Now these 4 operational steps, they work together like a perfectly tuned engine. First up, bulk purchasing, buying these massive pallets of goods all at once. Second, a strictly limited product selection. So instead of offering, say, 50 different types of ketchup, they offer just 1 or 2. And because there are way fewer options, everyone buys those specific items, which immediately triggers step 3, remarkably fast inventory turnover. The products just absolutely fly out the doors. And all of this culminates in step 4, incredibly low operating costs. So selling fewer products actually increases overall efficiency. I know, it sounds completely crazy to a traditional retailer, right? But by severely limiting your product selection, you literally supercharge your inventory turnover. You don't have all this unsold stock just sitting around collecting dust on the shelves. And what that means is your overhead and your operating costs stay remarkably low. Honestly, it's an absolute masterpiece of efficiency.
Section 3. The membership fee secret.
All right, here is the real secret sauce. Recurring revenue. That's the predictable cash flow generated consistently from those annual membership fees. Think of it kind of like a subscription to your favorite streaming service, but applied to a massive physical store. Literally, before a single shopping cart is even pushed down a warehouse aisle, Costco has already locked in its profit for the entire year, just through those fees. This creates unmatched customer loyalty too, because once you pay the fee, well, you want to get your money's worth, right? It results in this predictable cash flow that most retailers can only dream of. Now, what's really interesting when we compare these 2 revenue streams side by side is how they balance each other out. On one hand, product sales rely on very low markups to move a ton of volume. But on the other hand, the membership income provides that high-margin, super predictable cash flow. Because that membership income safely covers the bottom line, they don't have to desperately squeeze every last penny of profit out of the products themselves. They're structurally free to sell goods with extremely low markups.
Section 4. Costco's low price strategy. So high sales volume combined with intentional low profit margins creates massive bulk buying power. When you're buying millions of units of a single item, you have the ultimate leverage for fierce supplier negotiation. They use this staggering scale to demand the absolute best prices from suppliers, and then, here's the kicker, they turn around and pass those deep savings directly to you. That builds incredible customer trust. It's something traditional retailers really struggle to maintain, mostly because we all know those traditional stores are just trying to maximize their margins on every single box.
Section 5. The shopper psychology. Now, once you're inside, you are entering a meticulously orchestrated environment. We're talking treasure hunt shopping, limited time products, huge package sizes, strategic store layouts, and of course, those free samples. They intentionally move essential items around, so you're literally forced to hunt for them, bumping into limited time deals along the way. Those free samples, they deliberately slow your pace and subconsciously make you feel, kind of obligated to buy.
And those massive package sizes subtly convince your brain that you're saving money simply by stocking up. And this all creates a very reliable final result. Shoppers consistently buy way more than they originally planned. I mean, we've all experienced this, right? You walk in just needing paper towels. Actually, scratch that. You walk in 4 paper towels and you walk out with bulk paper towels, a kayak, a huge tub of mixed nuts, and maybe a new winter coat. The combination of undeniable value and these masterfully placed psychological triggers makes it practically impossible to strictly follow your shopping list.
Section 6. The Unsolved Mysteries.
As we start to wrap up this explainer, consider this for a second. How on earth does Costco completely dominate the market without spending heavily on traditional advertising? Seriously, think about it. When was the last time you saw a slick TV commercial or some massive billboard campaign pushing a Costco membership? They practically don't do it, yet they just keep growing relentlessly year after year. Not to mention, what are their biggest existential business risks moving forward?
Well, those are the exact concepts we're going to break wide open next time. Coming up in Part 2, we'll reveal how they sustainably earn billions yearly, the surprising truth about their employee treatment, the real mechanics behind that ad-free marketing dominance, their biggest existential business risks, and the profound lessons entrepreneurs and investors can take away from this model. You absolutely will not want to miss it. So, until then, ask yourself this. If the proven secret to making billions in retail is simply taking less profit on every sale, why hasn't everyone else figured it out? Thanks for learning with me today, and I'll catch you in Part 2.
Welcome back to this explainer. Today, we're taking a look under the hood of Costco's unique system. Because, their greatest strength isn't actually the sheer volume of goods they move, it's the masterful, honestly kind of counterintuitive, ecosystem they've built to generate massive long-term profits.
So, how does a store actually make billions without charging the absolute highest prices? Let's just crack open the playbook of one of the world's most successful retailers. Look, most stores try to squeeze out the maximum margin on every single item sitting on the shelf. But Costco, they took a radically different path. They prioritize efficiency, trust, and a completely different profit engine. Here's our roadmap for unpacking all of this. We'll start with the membership profit engine, then look at how they invest in their workforce, explore their anti-marketing strategy, navigate future threats, and finally wrap up with some lessons in lasting value.
Okay, let's jump right into the membership profit engine, which is really the bedrock of their stability.
Here is the fascinating reality of their model. They actively cap their product margins at around 14 or 15%. They are literally selling products near break-even because, for them, the profit is in the card, not the cart. With membership renewal rates famously hovering right around 90%, this model provides them with a massive, predictable stream of cash upfront. And that recurring revenue completely changes the math for them. It allows them to keep product prices incredibly low because the profit, well, it's already secured by the membership fee itself before you even walk through the doors.
Beyond those little cards in our wallets, they aggressively drive sales through just insanely rapid inventory turnover and unshakable supplier relationships. They move goods so quickly that they often sell products before they even have to pay the suppliers for them. It's brilliant. And this speed is fueled by intense consumer trust, which is perfectly embodied by their private label, Kirkland Signature. By offering high-quality equivalents to name brands and famously holding the line on loss leaders, like, that $1.50 hot dog combo, they create this fiercely loyal customer base that just buys in high volume over and over again.
So to wrap this part up, remember that predictable, recurring revenue is the ultimate financial shield here. When economic downturns hit or consumer spending slows down, that baseline membership income is what keeps the lights on and the profits flowing, totally regardless of everyday retail volatility. Moving right along to our next chapter, investing in the workforce. This is where they really break the traditional retail rulebook. You see, paying higher wages than competitors isn't some charity initiative. It actively, mathematically improves long-term profits. By paying well above minimum wage and offering genuinely excellent benefits, their productivity simply skyrockets and employee turnover plummets to a fraction of the industry average. That high retention completely eliminates the massive constant costs of recruiting and training new staff. Plus, a strong company culture replaces that typical transactional retail focus. It means employees actually stick around, they care about the warehouse, and they provide vastly superior customer service as a result. The big takeaway here, investing heavily in your workforce and company culture directly translates into a much healthier bottom line. Treating employees well isn't just a nice thing to do. It is a highly calculated, aggressive strategy for long-term operational efficiency.
So, if they aren't treating employees like disposable cogs, what else are they doing differently? Let's look at their anti-marketing strategy and how they manage to grow without ads. It's wild to think about, but instead of buying expensive ads like everyone else, they curate a limited selection that drives this really addictive treasure hunt experience. Think about a typical supermarket. It might overwhelm you with 40,000 different items. Costco only carries about 4,000. This limited selection drastically reduces decision fatigue for the customer, and it creates immense supply chain efficiency on the back end. Plus, they constantly rotate exciting, high-ticket items. We're talking everything from kayaks to giant teddy bears, creating a vibe where you feel compelled to buy things right then and there because, hey, they might be gone next time you visit. By relying entirely on membership exclusivity and genuine customer loyalty, they generate immense word-of-mouth marketing that literally saves them billions of dollars every single year. Just think about it for a second. When you find an incredible deal on a massive TV or high-quality groceries, what do? You tell your friends. That organic, genuine recommendation is infinitely more powerful and significantly cheaper, by the way, than any advertising campaign money can buy. But of course, no empire is invincible. Let's shift gears to navigating threats in tomorrow and see what the road ahead looks like. Every single empire faces pressure, and right now, they're fighting a battle on two distinct fronts. On one side, you've got fierce digital competition from e-commerce giants like Amazon, who are continuously raising the bar for consumer expectations. And on the other side, real-world logistical hurdles. We're talking unpredictable inflation, volatile global supply chain disruptions, and the very complex cultural challenges of trying to expand their massive physical warehouses internationally. To counter these threats, they are realistically building for the future. They're using AI-powered inventory management, expanding digital memberships, and carefully scaling internationally. The key here is they aren't making wild, unrealistic leaps. Instead, they are leaning into warehouse automation, boosting their online shopping presence, and focusing on really robust sustainability initiatives to ensure they remain completely relevant for decades to come. Finally, let's distill all of this down into our last section, lessons in lasting value. Think of this as the universal playbook. Whether you sell software, services, or physical goods, these principles can apply directly to you. Establishing a recurring income stream and building just unwavering customer trust will dramatically stabilize your business. You have to keep your operations incredibly simple, treat your team genuinely well, and scale through efficient systems. Refusing to compromise your long-term vision for a quick short-term buck, that is the ultimate universal key to success. Ultimately, squeezing every last penny out of a customer is just not the optimal way to win. It really proves that the highest margins do not automatically equal the highest success. By aligning their own success directly with the value they provide to the consumer and requiring a membership to access that value, they engineered a completely different path to the top. I highly encourage you to take these insights into your own endeavors. Build businesses that create genuine, lasting value rather than just endlessly chasing short-term hype. Because when you prioritize trust, efficiency, and the well-being of your employees, you aren't just building a company. You are building an empire that can weather any storm. So looking at your own work, your own projects, or your own business, I'll leave you with this. Are you playing the short game of maximizing today's margins, or are you building the loyalty and recurring trust that will sustain you for a lifetime?